So much, sir, for being with us on the program. Now, Credit Suisse
Nice
has now announced a $53.7 billion bailout from the Swiss central bank. What does that tell us about how serious this crisis is, and to what extent will this help them strengthen liquidity?
Well, I think they're just kind of replacing the money that's heading out of the bank, because people fundamentally do not want to invest. They want to invest in X, but they don't want to have to take on the risk of the company they're investing through going under, and they end up not just investing in X, but investing in the entity that they're investing through. So we're seeing, I think, in this modern technology world, this extra risk, people starting to recognize that, gee, if I want to hold money, why should I have to take the risk that Silicon Valley Bank is going to collapse, or Credit Suisse is going to engage in some fraud? And they've certainly had a bit of a history of some questionable things of marking things not appropriately onto the books. So I think you're seeing, not just with Credit Suisse and the two banks in the U.S. that have failed, but other banks, there's just a general ability here to move your money into mutual funds that are equity financed, not debt financed, not leveraged, and invest that way, invest safely, where you know that the entity, the mutual fund you're investing with, has no debt because they're equity financed. And that really comes down to Islamic banking, to tell you the truth. So I wrote a book called Jimmy Stewart Is Dead, which calls for something called limited purpose banking, the entire financial system being run by equity financed mutual funds. That's really idealized Islamic banking.
What are your thoughts on the public tender offers that Credit Suisse has also announced? How will that help them? And more importantly, will investors be on board?
Tender to, in other words, to sell shares. Well, if the share price is low enough relative to the value of their assets, that might work, but it's going to water down the existing investors. And it just, why be investing in a major entity that has all kinds of businesses that you're not familiar with, that you can't really evaluate? It just feels to me, would I want to do it, to invest in a company that has a history of financial accounting problems and other types of problems, as opposed to investing in exactly what I want to invest in? It might be Turkish stocks or mortgages of this particular, we don't have to invest in things we don't understand anymore. We have enough financial innovation to get around that.
Right, Professor. Now, the company is taking several measures, as we can see, which they're hopeful will support their core business and clients. But it's not only Credit Suisse that's facing issues. There seems to be a pattern in the global banking sector of big banking institutions facing a decrease in stock prices.
Yeah, I think in the U.S. case, at least, we have these uninsured depositors who saw with SVB that they could lose a lot of money instantly. Now the federal government came in and said, we're going to insure fully the uninsured depositors in these two banks, but they didn't say anything about the other 8,000 banks. And so the uninsured depositors there must be thinking to themselves, hey, I got to move my money out because I was not included. Those two banks were included, but my bank that I've got my $30 million in, it's only insured to $250,000. Why not I just type a few instructions to have my bank wire the money to a Treasury bill mutual fund over at Fidelity or Vanguard or T. Rowe Price or any of these mutual fund companies, and know that I can sleep at night, not have to worry that the money I've set aside for payroll for this month is going to disappear because the bank goes under, because of things I don't know, like, that they invested in SVB's case, they invested in what appeared to be safe assets long-term treasuries and long-term mortgages, but then they did not mark them to market. They didn't say what the true value was. And those assets had lost lots of money. And then when they came around to finally having to sell some of these assets, all of a sudden the depositors realized that this bank was insolvent. It was really insolvent back to September. If you look at the numbers, they just were lying in effect, and with the government's permission, marking them to book or par. It's called hold to maturity valuation, not market valuation.
Well, it's going to be interesting to see how Credit Suisse strives to save its business and its clients in this situation. Professor Laurence Kotlikoff, thank you so much for joining us here on TRT World and sharing that insight with us.
My pleasure.